Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Santacruz Silver mining. Santacruz Silver is traded on the TSXV under the ticker SCZ and on the OTCQB under the ticker SCZMF. And in the next month or so, they're going to be transitioning over to the OTCQX, so be on the lookout for that. And we're going to dive in today to the Q1 financials and the Q1 operations with the executive chairman and CEO of Santacruz Silver Mining, Arturo Préstamo. Arturo, it's great to get you back on the show for this update. And with these Q1 numbers, you can see a marked improvement on many metrics. There's a lot to get into here. I don't want to steal your thunder. So let's just get into the key takeaways for investors from your Q1 2025 financial highlights.
Absolutely, Chad, and thank you for having me here with you. As you point out, Q1 is a quarter where it reflects the improvements that we have been working over the years into our different assets, and also the improvements that are bringing with regards of the restructuring of our Glencore transaction announced back in October 2024. So we're starting to see a reflection of those steps that are finally paying back, in addition, of course, to today's metal prices. So we're very excited on how the Q1 quarters looks and how the future quarters look for the company.
Well, Arturo, let's dig into some of these numbers. When you think about some of these year-over-year increases, for people listening in, the revenues are up 34% year-over-year. The gross profit is up 6,882% year-over-year. Net income's up 93%. Adjusted EBITDA is up 2,202%. The working capital is up 7,530%. I mean, these are some big increases. Maybe speak to how, in addition to the strong metals prices, optimizing the different mines, there's also a currency effect here at play.
That's right. Well, there are different things that have been helping us here. First, the Glencore restructuring was an instrumental for us. So that definitely allows us to build our treasury and to keep reinforcing our balance sheet. But also efficiencies that we have been taking over our different assets across all of our assets, Bolivia and Mexico, aiming to have mines that produce in a better and more efficient way. So these are starting to pay off. But as you point out, the FX in Bolivia has been under a lot of pressure. So the consideration of the FX into our financials is definitely another very important reason why our metrics have improved significantly. We expect this to remain here for many, many years to come. And for the first time, as we're showing now, the all-in sustained cash cost and the cost per silver equivalent on a per mine basis. So with that being said, we want our investment community to have a better judgment on our performance across all of our mines.
Well, let's dig into that last point a little bit more, Arturo, and that is your all-in sustaining cost for the quarter were down 8%, which is a good thing, down to 22.34. But you mentioned you're now reporting as of 2025 on a mine-by-mine basis, and before you have an ore feeding and reselling business in Bolivia at San Lucas, where you pretty much had to buy the material from local producers at near spot prices. You make a small margin on that business and then resell those once you process and resell the metal. But because the price of silver kept going up, you had to keep bumping that number up, and that was dragging down the overall consolidated all-in sustaining cost for the company. So maybe speak to how breaking these off separately gives people better visibility on all these different mines.
Yeah, you describe it perfectly, Sean. And that's correct. That was one of the main reasons why we break up the all-in sustained cost on a per mine basis. And just to give you an idea, Bolivar mine has an average cost of around $17 all in, Porco around close to $20 per silver equivalent. Caballo Blanco is our most efficient mine, which is around $15 all in on a silver equivalent basis. And the one that we have a higher cost this quarter was the Zimopan mine, where over the last year and a half, we have been doing significant capex investments into this mine because the future of the mine at level 916 is so promising. So we have been preparing the mine for that for the next 20 years. And by that, we have been buying a lot of underground equipment. This last quarter, on Q1, we received 3 scoop trams and some other underground equipment, compressors, and other spare parts. And that's what reflects an increase in the all-in sustained cash cost for Zimopan. But that's a one-time registry, and you will see the all-in sustained cash cost coming down significantly on the following quarters. So for us, it was important to break down this metric for the investment community as they can have a better reading on the performance of your mines.
Well, let's dig in there just a little bit more on Zimopan because this is the only mine you have in Mexico. The rest of the mines are in Bolivia, but it's one that you've had the longest. You've had it before the Bolivian assets. And so you're reinvesting in the business, you're reinvesting in the equipment to optimize it. And you mentioned that new zone that you're getting down into. Give people an idea of what the rest of the year may look like coming out of Zimopan.
Yes, actually, Zimopan, it's starting to pay off all these efforts, all these investments. Just to give you an idea, level 960 might represent the future of this mine. As we speak, we're milling on a monthly basis close to 75,000 tons a month, and around 40,000 tons are now coming from level 960. Level 960 has higher silver grades. It has copper as well in a higher percentage. So as we keep going deeper and along strike in this area, we're having more encouraging results. And we want actually to start increasing the tonnage, the throughput or the output from the mine to the mill, and reaching around 60,000 tons a month by the end of the year. That will allow you to increase your silver head grades on an average, will improve significantly the profitability of the Zimopan mine. And so far, I mean, the upside and the exploration has been improving to be a very strong mine. So the results that we're seeing so far are really encouraging.
Well, I appreciate you breaking that down as far as the assets in Mexico. Sounds like it's going to be a nice ramp up and improvement over the next couple of quarters, and that all the optimization and investment is going to be worth the candle, as they say. Well, let's get into
Exactly.
the Bolivian assets, Arturo. And I guess from a high level, let's also just remind people from an operations standpoint, in Q1, you produced 3,688,129 silver equivalent ounces. So a big chunk of that is silver itself, and then you've got a lot of zinc, a little bit of lead, a little bit of copper. Maybe just from a high level, speak about the production was a little bit less this quarter compared to other quarters. How do you think that starts shaping up for Q2 and moving forward? And why was the production a little bit less in this quarter?
That's a good question, Chad. And it's technically a seasonal matter, no? During the first quarter of the year, every year, if you see our first quarters in Bolivia, you have a slower production rate. And the main reason is you have carnivals, you have a lot of celebrations going, and that definitely it's something that does not allow you to keep a, let's say, a smooth operation during the quarter, no? But as it's normal as well, things are normalizing now. You'll see Q2 in a more normal production ratio. And as you can also see in our record historic productions, Q4 is always the strongest one. So we are in budget. We feel that we're going to be in the neighborhood of the same as last year, close to 19 million ounces silver equivalent, and with very good all-in sustained cash cost. So yeah, we're comfortable that we'll be improving our production rates in the following quarters.
Okay, so Q1 is usually the weakest, Q4 is usually the strongest, Q2 and Q3 are kind of in the middle there, but you're still guiding for 18 to 19 million silver equivalent ounces, which again puts you at the top of the heap compared to a lot of other smaller producers. I always think that your market cap doesn't really reflect the other companies that are in your peer group that have billion-dollar valuations. So just something for people to consider. Would you say that silver is still a big amplifier of your overall economics? Because I hear the knock against the company sometimes that you have a lot of base metals. You do have a lot of zinc, but what would you say the equivalent is as far as the amount of metal in each category? How much is silver? How much is zinc? How much is lead? How much is copper?
Generally speaking, Chad, you have around 48, almost 50% of your revenues is coming from silver, and the rest is coming from zinc and some copper mainly.
So almost half is silver then, more or less.
Correct.
Yeah. So that's just something for people to chew on as far as you want leverage to silver. Santacruz Silver does have about half of their assets in silver, and zinc has been doing well as well. So let's get into the Bolivian assets, though. Maybe let's start with the Illapa area with Bolivar and Porco. How did those mines produce for the quarter?
Yes. Well, Bolivar has a bit of a challenge during Q1 due to an area where we're mining right now, and we're encountering a little bit more water than what we normally have. Nonetheless, that has been fixed, that has been remediated, and it's nicely moving up again into that area, which is the Pomabamba vein with very high grades of silver. So Bolivar is on track and moving forward in the right direction. Porco, as you may recall, Porco is a narrow vein system, very narrow veins. The widest vein in that area is 1.5 meters. So as we keep moving forward and we keep, let's say, progressing in these artisanal mining methods, that this mine is not as mechanized as the other ones, we're starting to build more and more output or production from the mines. So it's looking good for the rest of the year. And so far, we're on budget at Porco Mine.
Okay, and then let's pivot over to the Cabalo Blanco complex. You've got three mines here that all report to the Don Diego mill, but you've got the Tres Amigos mine, the Reserva mine, and the CQCQT mine. Collectively, how is this complex going?
Well, it's really good. Actually, Caballo Blanco is a very efficient mine. It's a very modern mine. And what we did last year, Chad, is that the Reserva mine, we carve out Reserva mine from these two other mines. So now we're just blending the Tres Amigos and Colquechaquita ore, as we realized that blending the three ores from the three different mines was not the most efficient from a metallurgical point of view. So that has been proving to be the right decision. We're now producing literally the same amount of ounces as when we were running the three mines, with less ore moving across the mines and less ore being processed throughout your mill. So that's is translating into more efficiencies and less cost when you are producing the same amount of ounces from Caballo Blanco. So that's one of the most efficient operations we have. And the mine, it's in budget and in line to meet year budget so far.
Okay, so it sounds like things are going really well there now that you've just stuck with the two mines and blended those instead of all three. Just as a follow-up, what do you do with the Reserva mine then? Do you try to process it separately, or is there anything you can do with it?
That's a good question, and sorry for that. I didn't point out. But Reserva, we carve out Reserva is mining as usually, but the ore is being sold to San Lucas, the trading company. And in San Lucas, we blend it with different ore that is coming from the small miners. That has proved that it's a better way to run the Reserva mine, and it also has improved the profitability of that mine on a standalone basis.
Well, that brings up San Lucas. This is the feed sourcing business where you have a lot of smaller miners bringing in their ore, and that's what we were talking about at the onset, that you're kind of paying them near spot prices. You keep a margin for San Lucas to make money at it, but now you're also blending that with the Reserva mine ore. So tell us how the San Lucas business division is doing.
San Lucas, it's a very strategical business for us. It's a very important one. In addition of having or allowing you to have your mills running at full capacity all year round, it's a business that it's always contribute. It's a marginal business where margins are always, let's say, the essence or the business model. And it's doing well. It's very stable business. It makes always a good profit, $25 per ton. And in Bolivia, it's a country where you have a lot of small miners. So yeah, Bolivia is on budget for the year and definitely in a very stable situation that gives us comfort that we'll keep going forward.
And it's kind of a win-win because you're taking processing off the table for the little miners, and because you have the mill capacity, it's good for you as the business, and it's good for the government because they're getting paid taxes on this, where maybe this would have been handled, in a smaller scale artisanal sense, but maybe they wouldn't have got that tax money. So I think the government's on side, the small miners are on side, and it's good for the business. So it's a win-win all the way around. This also brings up the point we talked about last time, where you had done some refinancing of the debt, and that's because you were able to offer Bolivian promissory notes. You think you did that back in February, so these were a year long, and you got a really good rate. I think it was like 6.25% interest rate. But we also talked last time, Arturo, about the early repayment to Glencore. And you mentioned that at the onset, that that's really helping the financials. For people that missed that, just remind them when you're paying this off early, you save $40 million.
That is correct, Chad. And actually, we're walking the talk in terms of those early payments. Today, we have paid 17.5 million so far. We still have to pay 22.5, but we have a strong treasury today, north of $60 million and building. So we're comfortable. We'll keep walking in a disciplined way, and we'll keep paying and amortizing our payments to be finalized by the last week of October. So that, as you point out, will be saving us around $40 million. So that's definitely something very important for us as a milestone. But at that time, Chad, you will be technically free of debt. The other item to be paying to Glencore will be the conditional value rights, which the condition is having zinc north of $3,850 per ton. So hopefully, the sooner we start paying those, it means that zinc is not at that level, and at that point, we'll be making significant amount of money from the zinc as well.
Yeah, that'll be a good problem to have. If zinc prices are there, you'll be doing quite well as a company because you do have a good exposure to zinc. And I guess just as we wrap up, Arturo, there's a lot going on with Santacruz Silver from the production standpoint. You're doing great on the financial standpoint, looking forward to a bigger production quarter in Q2, Q3, and Q4. And the metals prices are cooperating too. So we're seeing higher silver prices. I got to imagine that puts a smile on your face. But is there anything else you want to say as far as exploration or anything else that the company has as development initiatives that you don't think get enough airtime but you'd like to speak to?
Thanks, Chad. Well, we're doing exploration across all of our mines, always inventorying the resources that we're depleting, and we'll keep doing that. And also ahead of what we have today as resources, we will be updating our resources. But yeah, so far our approach to exploration is to always inventory at least 1.5 times what we have been milling or depleting over the year. So far, the success rate is very positive. All of our mines are open along strike and a deep for future exploration. And we have been having some encouraging results both in Bolivia and in Mexico. So these mines will run for generations to come. That's my impression. And so we're very strong assets, and the assets that we want to keep growing and will allow us to keep building the company.
All right. Well, I think we'll wrap it up there for today, but that's a nice review of the Q1 operations and financials. Nice to see some of those record numbers as far as the year-over-year improvement. Looking forward to seeing that trend continue in the year to come in the next quarters. And for those of you listening in, if you want to follow along with all the news flow out of Santacruz Silver, definitely click on the link below in the show notes. It takes you right over to the Santacruz Silver website, right to their news section, where you can follow along and get updates sent to your email inbox, or just follow along with the news as it hits the wires. Arturo, thanks for spending some time to come on and give our audience an update on Santacruz Silver. Best of luck at the remainder of Q2 and looking forward to our next conversation.
Thank you, Chad. Thanks for having me here.